So there are quite a bit of updates this year. Um, I won't say quite a bit. There's some really big, impactful updates this year, starting with changes to the child tax credit, as well as the child independent care credit. A couple of minor changes with earned income tax credit, the 1099K, or what I call uh, the social media tax uh, viral sensation, I guess, that's going on. So be able to give you guys some further explanation on what's going on with the 1099K this year. Few annual changes, a couple other tax law changes, and then we'll be able to go forward from there. So, starting with the child tax credit and advanced child tax credit, basically what is happening is in 2021, as part of any number of the COVID relief packages, they made drastic changes to child tax credit, dependent care credit. Unfortunately, those changes are only viable for a year. So, following that year, we're going to revert back to what it was pre 2021 rather. So, the 2020 rules are going to come back and be the rules for 2022. So, uh, that means that child tax credit goes back to being a partially refundable credit instead of a fully refundable credit like it was last year. The credit amount drops back down to 2,000 per child. Last year it was 3,000 for children 6 to 17 and 3,600 for children 5 years old and younger for the 2021 year. So we go back to 2,000, no more 3,000, no more 3,600. The eligibility was previously under 18. It goes back to being under 17. So 16 years of age or younger. And then, as we are grateful to know, there was no monthly advance payment, so we don't have to reconcile the advance payments. We kind of go back to the software just doing what it has always done with the child tax credit without very much input from us at all on that form. The 2441, or the child independent care credit, is also reverting back to its 2021 non-refundable form. Last year, it was a fully refundable credit. This year, it will go back to being a non-refundable credit. The amount of qualifying childcare expenses has also gone back to what it was, which was 3,000 for one child, and 6,000 for two or more children. Last year, it was 8,000 for one child and 16,000 for two or more children. The maximum credit has gone down from 4,000 down to 1,050 for one child, and for two or more children, it is now 2,100 instead of the 8,000 that we saw last year. This is going to be a big impact on your clients because it is no longer fully refundable. Non-refundable credits can only be used to reduce tax. So if your taxpayer is already at zero tax, the 2441 will be of no help, no assistance to them. Their refund is not going to get bigger because you filed this form. For those people who have tax due, it can reduce that tax back down to zero, but that's as far as it's going to go. There won't be no increase to the refund from this being a refundable credit because it is going back to the non-refundable form. The credit rate and the income limits are increased, decreased depending on how you view it. 50% of the expenses when the AGI is under 15,000. Last year it was 125,000, so pretty much everyone was getting 50%, or a large segment of your customer base probably was getting 50%. This year it's going to be a lot less that qualify for 50%. The credit rate is going to gradually decline until it reaches 20% when the AGI reaches 43,000. Last year was 83,000, so it will go from 50 down to 20, between 15,000 and 43,000 in AGI. Um, then it will be 20% for everyone over uh, all AGIs over 43,000, and there's no phase out for it. So for your higher income individuals, they can still qualify for the 2441 or child independent care credit. Slight changes to um, EIC, the disqualified investment income, the max amount of investment income allowed is increased to 10,300. So it's up slightly. It's not a huge change. Um, and that's really only going to affect those people who have Schedule Ds or Schedule Es that are considered investment income, um, inactive K1s, things like that. Taxpayers, I don't know why this says that way. I need to adjust this. I apologize. It's taxpayers without children is reverting back to the pre-2021 form, and I'm going to give you the specifics on that. So the criteria for individuals wanting to qualify with no children, the minimum age is 25. Last year it was 19. The maximum age is 65. Last year there was no maximum age. The maximum credit has gone down to 560. It was a little bit higher than that last year, and now it is fully phased out at around 16,480 for your single filers, and your married filing joint filers, it's 22,610. The EITC max, I'm actually going to skip that one. I want to use this one. I like this graphic a little bit better. So in the first column, you have the number of children. The second column, you have the maximum EIC credit. So the maximum for 0 is 560. The maximum for 3 or more is 6,935. Then we get into the max AGIs, and I give you guys this information to save you time, keep you from banging your head against the wall as to why someone's not qualifying for EIC. The AGI could be a big reason, and in a lot of cases it is. So for your single filers, which that would include your single or head of household filers, the max AGIs are listed here. So it ranges from 16,480 for 0 children up to $53,057 for 3 or more. And then your married filing joint, the max AGI is 22,610 and for 0, and then for 3 or more, it's 59,187. Now, what this means is that if their AGI is above this limit based on the number of, you know, if their AGI is above the max AGI based on the number of children that they have, they will not qualify for any EIC. So if I was married filing joint with 3 dependents and my AGI was 65,000, for example, I would not qualify for EIC at all. Okay. Here are the updated tax brackets. Slight adjustments. I know previously in the news we were hearing about a lot of adjustments to tax brackets and standard deductions and things like that. But what they were referring to in the news, at least recently, was for tax year 2023, not tax year 2022. So those big adjustments for inflation are not going to show up until next tax season, not this coming tax season. Standard deduction changes, again, we're seeing slight increases, nothing groundbreaking. It's pretty standard increase across the board. I did want to point out one thing here, and that's because I learned this year. I was unaware. And as I told someone earlier today, I've been doing this 20 years and you still learn something every year that you didn't know. And this is mine for this year for 2022. Married filing separate. I've got that little asterisk there. And if you look over here to the right of this screen, um, you will see that for married filing separately, if one spouse itemizes, the other is forced to itemize as well. If the second spouse does not have anything to itemize, all of their income over $5 is taxable. So that was an interesting little wrinkle that I was unaware of until I spoke with some people at the IRS when I was in Las Vegas attending a convention in July. So I wanted to pass that along to you guys. Expired deductions and credit. The recovery rebate credit is expired. We've been dealing with the recovery rebate credit for 2 tax seasons now. And this is the last tax season that we will have, the last tax season, rather, was the last tax season we will have to do anything to do with the recovery rebate credit. So the stimulus payments, those are done. We don't have to deal with that. The above the line charitable cash contributions, that was on the 1040. It would allow you to put a uh, charitable cash contributions for those people who were taking the standard deduction. That is currently set to expire at the end of the set to expire at the end of the year. Uh, meaning it was not renewed for tax year 2022, at least not yet. Could it be before the end of the year? Yes, it's possible that it could be. Um, as well as the mortgage insurance premium deduction. I know I skipped one, but that's okay. The mortgage insurance premium deduction is in that same boat. It feels like every year we hear it's expired, and then somehow in December they get it renewed. So, of the things that are on this list, those are the two that may not stay on this list. I'll say it that way. The AGI limit for cash contributions on the Schedule A, um, it was 60% in the prior year. It will go back to no limit, which is what it had been previously. And then finally, we are in the final year of dealing with the COVID or disaster related withdrawals from retirement accounts. So those 8915Es that we had to deal with in 2020, the 8915Fs that we had to deal in 2021, this is the final year for it. So, for anyone who doesn't know, in 2020, taxpayers had the option of making a withdrawal from the retirement account if it was related to COVID or another disaster area. Um, in these instances, they could withdraw it without penalty, but they still had to pay the taxes on it. So the IRS allowed them to split the payment into three sections so that they wouldn't have to pay all the taxes in 1 year. They could pay the taxes over 3 years. And we are now in the third year of that. So if you run across that 8915F, it's going to be exactly the same as it was last year. You're going to take that money from the 2020, the amount from line 9 or line 17 to the 8915E, and you're going to report it to the 8915F, just like we did this year. So